Ladies and gentlemen, welcome to the Q1 FY2024 results conference call of Century Textiles and Industries Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Abhineet Anand from Emkay Global Financial Services. Thank you, and over to you, sir.
Thanks. Good afternoon, everyone. First of all, I would like to thank the management of Century Textiles for giving us this opportunity to host the call. We have with us from the management, Mr. R.K. Dalmia, Managing Director, Mr. Vijay Kaul, CEO, Pulp and Paper Division, Mr. K.T. Jitendran, CEO, Real Estate, and Mr. Snehal Shah. Over to you, sir.
Thank you. A very good evening to everyone joining us today. It is my pleasure to welcome you all to the earnings conference call for the first quarter of financial year 2024. Let me first take you all through the quarterly industry and financial highlights. The global macroeconomic continues to remain challenging despite inflation easing from record high. As per IMF, the global growth is expected to drop to 2.8% in 2023 compared to from 3.4% in 2022. Developed economies are expected to see an especially pronounced growth slowdown from 2.7% in 2022 to 1.3% in 2023. Global headlines inflation is expected to cool off from 8.7% in 2022 to 7% in 2023 on the back of lower commodity and energy prices. However, underlying core inflation is likely to decline rather slowly. Amid slowdown in global economy, India will remain the fastest growing major economy with growth expectations of 6.5 to 7% in 2023. In the backdrop of global slowdown, sticky inflation, and uncertain geopolitical conditions, we have been able to deliver satisfactory performance from all divisions. Talking about the financial performance for the first quarter of financial year 2024, the consolidated turnover stood at 1,106 crores. The EBITDA for the quarter was 129 crores with consolidated EBITDA margin 12.1%, and there was a net loss of 7 crore rupees. There is an exceptional item, loss of 65 crores due to the closure of spinning and weaving process at the textile mill. Now let me take you through some of the key highlights across our three business verticals. Starting from real estate business, the Indian real estate business is currently experiencing a favorable upcycle and one of the most buoyant periods in over a decade. Residential sales across all major markets in the country have witnessed a strong growth, with the industry growing nearly threefold in the past 3 years. Birla Estates achieved booking worth rupees 207 crores from already launched projects in Q1 FY24. The collection remained strong at 369 crores from all projects during the quarter at an overall collection efficiency of 98%. During Q1 FY24, the company acquired 3 notable projects at premium locations in Pune, Mumbai and Bengaluru with a GDV of 5,600 crores. The Pune project is 5.8 acres plot on Wesley Road with a gross potential of 2,500 crores. We acquired a plot in Walkeshwar, Mumbai, which is a 0.2 acre plot with a gross potential of 600 crores. The Bengaluru project is 28.9 acres in Sarjapur with gross potential of 2,500 crores. On the ongoing projects from Birla Alokya, Bengaluru, Birla Vanya MMR, and Phase 1 of Birla Navya Gurugram are due to delivery in FY24. The two earlier acquired projects in Bengaluru at near Devan Halli, near Bengaluru International Airport, and Raja Rajeshwari Nagar are progressing well and is expected to be launched in second half of FY24 in addition to the new phases of already launched projects. Besides two commercial assets, Birla Aurora, Birla Centurion continue to generate stable rentals. Additionally, our two projects were honored with two prestigious awards, wherein Birla Navya Gurugram received the Merit Winner Award trophy from British Safety Council, and Birla Niara was recognized as an iconic super luxury project of the year at the Times Real Estate Conclave Award 22-23. Lastly, the Indian real estate sector is poised for sustained growth on the back of strong demand led by rising per capita income and shift in consumer behavior. Despite moderate increase in property prices, the real estate sector is expected to experience continuous growth due to increasing GDP per capita, disposable income, and urbanization. The company's strategy remains unchanged, which is to focus on the premium and luxury segment for sustained future growth. Moving on to the pulp and paper segment, demand was slow in the reported quarter due to general slowdown. Paper prices were under pressure due to raw material price volatility and increased price competition from international mills, resulting in lower NSRs. Demand across tissue and board segment declined due to better prices offered from international mills, as well as demand from high consumption sectors like FMCG, F&B, pharma remained stagnant. However, corrective measures on the cost management front helped the company to maintain its operating profitability. The first quarter of FY24, the overall capacity utilization improved to 95% as against 93% in Q4 of FY23, with sales volume witnessing a decline of 8% year-on-year on 99,459 metric ton. In Q1 FY24, net sales declined by 2% year-on-year to Indian rupees 836 crores, primarily driven by lower realization, while EBITDA stood at 144 crores with margin at 17.2%. Writing and printing paper demand is expected to remain subdued in coming quarters, despite opening of educational institutions as less government tender in Q2 FY24 would put pressure on market demand, leading the price erosion. Tissue paper demand will see some seasonal impact in short term, but should stabilize by Q3 24. Demand in board segment expected to improve in Q2 FY24 as FMCG market is shaping up. However, cost pressure to remain high in domestic market due to imports and excess supplies from domestic mills. Export demand from Europe, US are expected to remain low due to recessionary impact. Lastly, talking about textile division, the first quarter under review, net sales were 218 crores and EBITDA loss of 12 crores. The Q1 FY24, despite raw material prices being low, demand remains sluggish, with most of the Indian mill operating at partial production capacities. Cotton prices in India have declined sharply by around 35%, and consequently yarn prices also declined, but there is a slight demand for yarn due to weak market sentiment. Apparel fabric demand remained weak on account of inventories getting piled up across the value chain. After a long lull in the bed linen market, inquiries started floating, but this segment being a part of discretionary spend, demand remained subdued. We have made a strategic decision to cease operation of our in-house spinning and weaving units. Instead, we will source all our grey requirement from trusted vendors, ensuring quality control under our strict supervision. This change will not impact on the revenue of the textile business. In fact, it is expected to enhance profitability due to saving in fixed cost. The company has provided rupees 46 crores for the impairment of spinning and weaving assets in this quarter and rupees 18 crores towards VRS paid to the related workers. In terms of outlook, textile retail demand is expected to start picking up by August 23 with the start of festive season. The demand is expected to be moderate in Q2 and improve H2 FY24. The markets have turned highly price sensitive and retailers are preferring lower ticket MRP items. US and Europe imports of textile products have fallen sharply. Industry experts believe that FY24 will be challenging year in global economy as well. Over the medium term, global demand should stabilize from Q4 FY24 and India will remain a big beneficiary supported by China Plus One strategy and free trade agreements with developed countries. Thank you.
So should we open the floor for questions?
Yes, open the floor.
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Kunal Kudania from DSP Asset Managers. Please go ahead.
Hi, sir. Good evening. This is Vivek Ramakrishnan. I have two questions. The first one being on the debt levels, which have increased to 1935 crores, of which short-term debt is about 686 crores. Do you expect that some of this debt will come down as your projects get completed and you get collections, or is it all going towards the land bank and the total debt level will be around these levels? And if so, what is the peak? If you're okay, I'll ask the second question also, sir.
Yeah, please go ahead, Vivek.
Okay. The second question is on the real estate business. Are we seeing any slowdown in sales velocity when we see quarter on quarter at all, especially in high value projects? When we've heard conflicting reports about inventory at Worli, not your property, sir, but overall. So is there any slowdown in demand for really high value properties? And any guidance on sales would be, or the next quarter would be very useful. Thank you, sir.
Hi, Vivek, this is Nehal here. So to answer to the first question is, we expect the debt levels to remain the same by the end of next year because the cash flows from the businesses will start trickling in. It has increased because we made these 3 purchases in the early part of the year. So that is one of the reasons why the debt levels have gone up, but they are expected to remain the same unless there is some new deals that the real estate business signs. So therefore the debt we expect to be somewhere around 2,000. Maybe if they spend another 500 on a new deal, that might go up to 2,500. To answer your question on the short-term debt, yes, we are going to release the short-term debt. We are in the process of replacing it with some long-term debts going forward. So those limits will be freed then. So is that okay with you?
Perfect, sir. So thank you very much.
KT Jitendran to answer the second question. Hi, Vivek. Thank you for the question. On the real estate demand, I see the other way. The prices are going up. velocities are increasing, number of players are reducing, inventories are lesser. So we see a multi-year kind of attraction in sales velocities. For some of our projects, prices have increased by more than 25 to 30%, and we are short of inventory. So right now the challenge that we are having is we don't have enough inventory to sell. Otherwise, we could have done much better sales than what we are reporting now. When our new launches come in either late this quarter or early next quarter, I think our sales velocities will pick up. But I don't see any sort of a slowdown in the foreseeable future. Vivek.
Sir, thank you very much, sir. If I can just ask a follow-up question on that. We were just looking at the number of units sold quarter on quarter. Is it that at the late stage of the project, the pace of sales comes down, and that's the effect that we are seeing, or is there?
In Worli specifically, there's a lack of inventory now. Most of the projects have seen possession. If you look at many of the marquee projects, they all have post-possession. Most of the inventory is sold. There's a huge lack of inventory in the Worli market right now. So hopefully when we launch our Tower 2 in Q4, we expect to get very strong traction and better prices.
Sir, thank you very much for the answers and wish you good luck.
Thank you.
Thank you. Our next question is from the line of Pawandeep Bhatia from NV Alpha. Please go ahead.
Hello, sir. One of my questions been answered asked by the past participants. So, are we telling that our inventory, our collection number in booking value is down because of inventory getting sold off and new inventory, fresh inventory not coming in? And second question, sir, we used to comfortably clock 135-40 crores on rental side. I can see 30 crores being booked, being announced, declared this quarter. So it's around 115, 120. What is the reason of our rentals going down, sir, in this market?
Yeah, thank you, Pawandeep. So primarily why we are not able to clock sales is lack of inventory. We are at a position where almost 80% of our inventory is sold in all projects. Largely the impetus will come from new launches, which we are expecting to have in the future quarters, mainly Bangalore, Worli, NCR, all of these projects. So that's one part of it. The other part on rentals, 140, so we have never clocked. We have been clocking 120, 125 over the last few years, the COVID years. Now with that, rental has gone up to 130. Yeah. So 30 crores is a net figure, what you're seeing is, which means the gross rentals minus all the costs, the maintenance costs, etc. What we must be talking about is the gross rentals. But even gross rentals are not reached 140 crores. At best, it has gone about 125. Maybe initially when in 2017 or 18, when we had Vodafone giving us 250 rupees per square foot, we had slightly higher rentals at 135 crores. But otherwise, our rentals are currently, if you look at it, we are 100% leased out, zero vacancy, and we expect we have an average rental of about 187 rupees per square foot, all sold, all leased out, and we expect close to about 130 crores of annual rentals. And it is better than the last 2 to 3 years that we have seen.
So, sir, this number will be stable going forward, or it will
only increase from here, Pawan. We're only seeing this number increasing. Yeah.
Okay, I'll join back in the queue. Actually, I had a few more questions.
Yeah.
But, thank you.
Thank you. Our next question is from the line of Biplab Tibarma from Antique Stock Broking. Please go ahead.
Good evening, everyone. Sir, I have 3 questions. First question is regarding, sir, yesterday we saw from the India Homes filing that Century and India Homes have signed a JDA for 6.8 acres project development in Badarpur, Southeast Delhi. Just if you could throw some light about the project, such as like what would be the expected GDV, what would be the area, by when it would be launched, some timeline. This is my question. Yes, sir.
Yeah. Thank you, Biplav. We kind of concluded the deal yesterday only. This is in prime Delhi on Mathura Road, India Hume Pipes. It's about roughly 7 acres of land with a total possibility of about 1.4 million square feet. We expect we expect a GDV of about 2,800 crores or thereabouts over a period of 6 years. Launch in about 12 months.
Okay, sir. Thank you, sir. And early in this month, I think a few weeks back, you have announced one project in Thane from Hindalco. So what would be the GDV and area of that project?
That should be close to about 5.5 million square feet. It's 31 acres of land with a GDV of almost 8,000 crores, approximately.
8,000 crores?
Yeah, approximately 8,000 crores.
That's fine. Okay. And one final question is on the Niara. So I was just checking the numbers. So if you see in terms of inventory units, we have sold more than 80%. But in terms of value that we have given is we have sold only 72%, around 72%. That means the unsold inventory, you have a higher ticket size inventory. So in that context, you also planning to launch the Tower 2 where the ticket sizes would be higher. So in that context, would you have a look at the products? Because if my understanding correct, Tower 2 would be very uber luxurious kind of products. So do you see some kind of slow traction, or is it too early to see these as a trend?
So, Biplav, as I mentioned, the bulk of the inventory in Tower A is sold. Right now, we are selling at about 80,000 rupees per square foot, 78 to 85,000 rupees per square foot. One large apartment at the top we sold even at 85,000. We don't see any apprehension on that account. The only thing is that we are reluctant to sell inventory here because, as you mentioned, 80% of the units are sold. We need to keep to hedge against inflation, etc. I think we can realize much better prices. We hold on to this inventory and sell it at a later part. All the cash flow that we require is largely taken care of for Tower A. Tower B, we're extremely confident given the demand supply situation in the market that we'll have very strong traction. The number of apartments will be much less in Tower B. We'll be hardly having about 150 or less apartments, and I don't see any challenge in moving that inventory at much higher prices, given the demand in the market.
Okay, sir. Thank you, sir. I'll come back in the queue.
Thank you.
Thank you. Our next question is from the line of Dixit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity. Firstly, so you mentioned about the Hindalco land. Over how many years you feel you can realize this?
I think we'll take about 8 to 9 years.
Okay.
For this, yeah.
Okay. And regarding the Sarjapur Bangalore land, you mentioned 2,500 crore potential. What kind of, how many square feet we are planning to build there?
It's about 2.8 million, about 3 million square feet.
Okay.
Yeah. With a top line expected of about 2,800 crores.
Okay, 2,800 crores. Okay. And now my second question is regarding the launches. So in the previous call, you have mentioned that we are planning almost 5,000 crore of launch this year. So are we on a track? And I think
we are completely on track, Dixit. Yeah, we are going to launch either late this quarter or early next quarter our project in Devanahalli, Bangalore, 52 acres. Then we will also launch the Raja Rajeshwari Nagar. We are also planning to launch Tower B of Birla Niara in Q4 this year. We are also planning to launch the Walkeshwar project this year. We are also planning another launch of phase 4 of Birla Navya in November, December.
Okay.
So we expect the second half, the latter half of the quarter of the year to be heavily, launch intense.
Okay. And one more question on, earlier you mentioned that, we are targeting annualized 5,000 crore kind of run rate. After these recent purchases of land, do you want to revise it for, let's say, FY25?
No, I think right now we'll keep it at 5,000. I think these are important because we are running out of inventory. This inventory is important for us. So I think with this kind of inventory, we will keep the target of 5,000. We will think about revising that as we acquire more projects.
Okay. And one last question from my side. Of lately we are more, rather than JDA, we are more into buying outright purchase.
The project that we did yesterday completed was a JDA.
Yeah.
This is the fourth JDA we have done so far. So we have about 4 JDAs and about 4 outright, so it's 50-50.
Okay. And so in outright purchase, what kind of IRR we generally look at?
Given today's market, land price going up, etc., there is not many, JDA opportunities in the market. Most people are preferring outright. JDA is largely opportunistic. So with that, we look at least about 18% IRR post-tax in our outright calls.
Okay, fine. That's it from my side. Thank you.
Thank you. Our next question is from the line of Harsh Pathak from B&K Securities. Please go ahead.
Yeah, hi sir, good evening. Sir, I wanted to check on this, the deal with Indian Tube Pipes. You mentioned that the potential is 1.4 million square feet and GDV of 2,800 crores. So is this value attributable to us, or this is the entire potential of the project?
This is the entire potential,
okay.
Harsh. That's the entire project potential.
Right, and from this we have a 64% share.
That's right.
Okay, and this Thane project would be launched, sir, when? In FY25?
No, this because a large project, this needs a lot of work on it and cleaning up the land, etc. We have bought it as is where is. So we expect about 15 to 18 months is our target for launching this. Yeah.
Right, sir, right. Sir, and one more question on this Indian Tube Pipe deal. So how much deposits have we already paid or are yet to pay? From this revenue sharing, whatever we have with them, what is the timelines, and as in when do this deposit get adjusted? Any color on that?
Yeah. We expect the land value is about 630 crores. The deposit that we're paying is about 145 crores, of which we have paid 25 crores now. The rest of the money will go for conversion, etc. We'll be directly paying to the authorities, about 105. And at the time of the launch, just before launch, we will be paying another about 15 crores.
Right. So this will be spread out in the next 12 months.
Yeah.
Okay, understood. And sir, on the balance sheet, you mentioned that on the debt side, we are looking to maintain these levels of 2,000 crores. Maybe at max it can go to 2,500 crores. But this doesn't still include this payout for Thane land and also Indian Tube Pipes, and maybe the potential deals will be signing for the rest of the year. So does this also take care of all these aspects, or any upside we can see here?
I think in the answering the first question, I mentioned that as far as we are concerned, we have spent most of the money in the first half, but the cash flows from our manufacturing businesses are yet to come in during the year. So as far as they are able to manage any additional requirement, because for Hindalco deal, for example, we just have to pay 200 crores as initial price because the payment is deferred payment.
Right.
So if there are some major big deals that KT signs for which there is going to be an outlay required, only in that circumstances I expect the debt to go up from its present levels. It might have some peaks in the middle of the year, but at the end of the year, as of today, I am expecting it to be as it is, unless there is some major deal signing that happens. Of course, which is there in the pipeline, but we don't know when it will materialize.
Okay, sir. Okay. Got it. Thank you. Thanks a lot, sir.
Thank you. Our next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, just a couple of questions. First, a clarification. So, along with any other project get left out in terms of the new projects that you have taken? So, 3 were mentioned in the presentation. One is Hindalco, 4th, and one is a JD which you signed for Indian Home Pipes, 5th. Anything other than that?
Other than that, what Dalmeji mentioned in the main speech.
Yeah, those were the 3 which were a part of the main speech.
That's right.
Pune, Walkeshwar and Bangalore.
Yeah.
And then Indian Home Pipes. Yeah.
As of now, these are the 5 things we have signed for the current year. We're expecting more deals in the pipeline, so when it happens, we'll be happy to announce those.
And all these are JDs, right?
No, this is not JDAs. These are outright and mix of outright and JDAs. The Hindalco is a deferred outright, and what we did with ISP is a JDA.
Okay.
Yeah.
Okay. Rest on all that. Okay. The other thing is, have we thought about how much projects do we want to take on one at a time, or want to execute at a time? Is there any outer limit, or is basically as and when basis wherever you see your threshold IRR, you are willing to put in the capital?
At this point of time, we have enough and more bandwidth to finalize as many projects as possible in each of these markets. Bandwidth or the resource is not a constraint. We are looking for the right projects, right location, right product that we can get at the right market value. There is no other constraints at this point of time.
Which means the 2,000 crore balance sheet debt level is not a sacrosanct number, right?
No, not at all.
Not at all. Okay. And out of these 5 new projects, which one of them would start in FY25?
I think Walkeshwar will start in FY24 only. We'll launch it in FY24. The rest of projects like Pune and Bangalore will start in FY25. We plan to start even the Delhi project in 25. The Thane may take a little longer.
Okay. And you have paid 300 crores initially for that in the Thane one?
Yeah, we will. As of now, we have not paid anything. We will be paying over a period of time.
Okay. Thank you very much, sir. Okay, lastly, on the own land, whichever project that you take, there what is the margins that you would look at?
Depends, Ritesh, from project to project. So if you look at Kalyan, it's about 30-35%. Worli, more like 50%.
Okay.
Yeah.
And in terms of JD, there what kind of margin and IRR is possible?
Yeah. So again, it is location to location. There's no one specific number. IRRs of course north of 20% for JDAs. Yeah. Margins to look at close to 30+% in outright deals. Yeah. But again, it completely moves from location to location depending on what's the potential, size, opportunity, etc. Lots of factors.
Okay. Thank you very much.
Thank you.
Thank you. Our next question is from the line of Pinaki Banerjee from AUM Capital Private Limited. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, coming to the presentation with your pulp and paper segment, you have stated that in the writing and printing paper that you are under less government order tenders in Q2 FY24 would put pressure. But sir, actually, going by what we are doing, the country is scheduled to have the general elections coming next year, and various state and the Indian government would look forward to complete all their projects. So are you not expecting some better, high quality of tenders in this regard?
Yeah, Mr. Pinaki, what is happening is that there are 4 or 5 new tenders which are coming up in the country for the publishing of books, but that will come sometime after August 15 to October, sometime between August 15 to October. And that bidding process will take some time, and the orders cannot come before end of October or November. So till that time, there is going to be a little bit of difficult situation. Otherwise, it's just fine, you know.
Okay. Sir, and my last question is that on an overall basis, based on your presentation and whatever commentary you have given, like you are having just in the real estate segment, you are having some bit of optimism, and while the paper and pulp and the textile segment is looking a bit subdued at this point of time. So is my understanding correct, sir?
Not really. I think what we are telling you is the true, what is happening at the marketplace. So, till April, we were selling quite nicely. So, everything has changed in the last 1.5 months, 2 months. So, it may again change back. If the tenders come in, maybe the sentiment goes back again. So, it is not that we have given a subdued picture for paper and very high picture for Birla Estate. Even though, yes, Birla Estate is going to be the, there is a quite optimistic enthusiasm.
It is a cash cow right at this point of time for you, if I am correct to say.
Yeah.
Okay, sir. That's all from my end. Thank you, sir.
Okay, thank you.
Thank you. Our next question is from the line of Dhruvesh Sangvi from Prospero Tree. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, I would just like to understand on the real estate side, if you can explain the cost structures, because we are building up relatively new versus the leagues of Godrej or Oberoi or some of the southern players who are there in the market for a long time. And I'm sure we are learning and adapting a much better strategy from the start. So considering that, how are we adapting the cost structures? And if you can, give a holistic view on how are we thinking about the fixed cost structures of the company. I mean, as I see today, it seems to be somewhere around 200 crores per year. If you give some thoughts on that, it will be helpful.
Thank you, Dhruval, for your question. So, largely, we follow an outsourced model for construction. Also, we don't take up projects where we cannot afford good contractors, good consultants and designers, etc. So we largely operate in the premium segment, where we know that we are able to afford good quality contractors who will deliver with all compliances in place. That's very important. The other, number one. Number two is that we budget very carefully. We budget for escalations. We budget for contingencies. And over and above that, we look for margins. Number three, we are in our JDA projects, whatever we have done, most of them are profit sharing. So automatically there is a hedging done. Even otherwise, when we do it, when we develop a project, we do it phase-wise. So your costing is that way taken care of as per your sales. And you also keep some inventory to the end of the project so that to take care of any kind of inflationary methods. And so these are some of the things that we talk about when you talk about project costs. We have a very strong monitoring system to make sure that we stay within budgets. And as far as
the corporate overhead,
the overheads are concerned, as I said, Dhruvesh, you're right. Given our scale at the moment, our overheads look a little high. But you have to understand, previously Mr. K.T. Jitendran, somebody asked him about whether we have the bandwidth or not. So the current cost is because we have already built the bandwidth, and sort of people are on the bench right now waiting for projects to launch. So over a period of time, this cost will get absorbed. And when we quote our, IRRs and our EBITs on projects, we have a process of providing X percentage based on the project size of our fixed cost to the project for arriving at the IRR and the EBIT. So that way we are taking care of. So yes, they might look little high right now looking at the size.
I was not coming from whether it is looking high or not. I do understand it's a building phase. Just wanted to understand that. So if you can expand a little bit more on this 200 crore or whatever the number is on the corporate overhead, how does this team structure look like? How many people? What are they brought? I mean, if you can give some color on that area, like why do we require so many people at the planning stage? I'm sure there must be reasons, but some flavor to it.
Yeah, first of all, the 200 figure is a misnomer. It's only less than 100 crores is our overheads. Fixed overheads is 100 crores. We have about 250 to 300 people divided over this thing. So as I see, the number is only about less than 100 crores. The rest is all largely expenses for your marketing costs, what you have to expense out when you do your launches, etc.
Perfect.
So that 200 crores is not the right figure. Okay.
Perfect. Yeah. Right. And one question related to margins, because, and please, sir, correct me if I'm wrong, because I'm relatively new to this company. On the broad level, Parel is the owned land. Worli is the owned land, the one which is launched just last year and sales happened amazing. But most of the newer aspects are going to be land which will be purchased or via JD or JV or the route that we do. And therefore, I think I read the previous Concalls where you had indicated margins to be like 70-80% on the existing project which is going on. So how should we see the profitability after taxes? I mean, is it sensible to say when we start executing 4,000 and 5,000 crores and when we reach the possession and when we start booking them, it will be 3, 4, 5 years ahead? Is it easy to see 20-25% net profit margin after taxes? I mean, if I do the math, it reaches there, but I just wanted a confirmation or some affirmation there.
I can't confirm that much, but I think at this point of time, if you take a mixed bag of your own projects and that, I think 20-25% is easy. I think more like it will be about 20% PAT margin. For example, some of our projects which we have taken, like Delhi, we are clocking almost 50% EBIT margins.
Right.
50. So it's a mixed bag. Some of the projects, it has done very well. We are done, we are getting more than 50%. Some of the projects is more like 25%, but nothing is below 25% EBIT margin. The profit, we will be completing 2 or 3 projects this year, so we'll know for sure what kind of, profit margins we're able to crack at the PAT level. Yeah.
Right. And so last one, in terms of strategy where you mentioned that, we are focused a little bit more towards the premium side, but when we think about expanding in 4 cities and probably do 12 or 13 projects at a point in time, is this a fairly good approach or a slightly mass market approach should also start kicking in, or some thoughts around that?
Yeah. So at this point of time, I think there is enough and more room at the premium segment for us to expand in each of these chosen markets. I don't see a situation coming up at least the next 5 years. But as we grow higher and as we build more and more capabilities, as we grow larger and larger, of course, we will be looking at flanking at the other mid-segment markets also. That will be a future growth strategy once we completely consolidated in the premium segment. But I think for the foreseeable future, I think there is enough and more gunpowder available in enough of demand available in the premium segment. When I say premium segment, I largely look at about around 6,500 to 7,000 and above per square foot.
Thank you. We move to the next question. Our next question is from the line of Mr. Ajit from Nirzar Enterprises. Please go ahead.
Hello.
Hello.
Yeah, am I audible?
Yeah, you are.
Yeah, thank you so much for taking my question. Sir, just to expand on the previous participant's question on debt levels, I just want to understand, is there any thought process internally that we don't want to go beyond a particular debt limit, 3,000, 3,500 crore? Is there any thought process around that? And related to that, what will be our blended cost of borrowing as of now?
Right now, to answer your last question first, right now my blended cost is around 7.5%, but that is primarily because majorly most of the borrowings are sitting in the short-term bracket. It is expected to go up to close to 8% once we shift that to long-term borrowings. In terms of there is no ballpark that we put ourselves in terms of how much we will borrow. It all depends on how fast growth of the real estate business does. Broadly, we have a number that, based on a mix of working capital loans plus long-term loans plus some unsecured loans, we are capable of going up to 5,000 crores also if the need arises. But of course, we'll go cautiously and we'll see if there is actually a need for doing that. And that will happen only if, we are expecting the real estate to fuel its growth through its own cash flows from FY27 onwards. So if that does not happen, there might be a slight pressure on the debt levels. But broadly, we are looking at 3,000 to 4,000 crores max at the moment.
Okay. And sir, have you also explored the lease rental discounting model for,
we are doing that right now. We are in the process of doing that. That's how we are going to move from the short term to the long term. That is one of the possibilities that we are.
Can there be any cost saving on that front?
Cost saving?
Yeah.
In what sense you are asking cost saving? You are talking the interest rates?
Yeah, interest rates.
No. I told you that we are at the moment, we are close to about 800 odd crores of short-term borrowing. So it is almost going to replace. So that is going to replace the lower cost into a higher cost borrowing, right?
Okay. And sir, just last question, if I may squeeze in. Can we also try to explore, because, as you are mentioning that if we get great deals and more land acquisitions can happen, we can go to 3,000, 4,000 crores of debt levels. Can we also try to explore some platform strategic tie-ups like Mahindra has done in the past? Mahindra and Godrej.
We are open to that right now, absolutely open to right now. But at the moment, the funds are not really interested in, we are only interested in taking equity, which the funds particularly two problems. One, they are not interested in residential. And number two, they are not interested in equity at the moment. But I think we have some talks going on. If something fructifies, we will certainly are looking at those idea to further fuel our growth. But we are looking that as a additional growth capital. For our present plans, we are pretty well capitalized right now. So we don't see any problem in unless we get some very good opportunity and we don't want to miss it or something like that. Maybe at that time we'll look at that. But we are already in the works in terms of tying up platform funding.
Thank you so much, sir. That was very helpful. I'll join back in the queue for my further question.
Yeah, sure.
Thank you. Our next question is from the line of Anil Raika from TradeLink. Please go ahead.
Good evening, sir. Thanks for giving me the opportunity to ask the question. This for Thane land which we have acquired is a JD. Is it JD or it is a outright?
So Anil, that's an outright, but payable over 4 years, 4 to 5 years.
So this 595 crores is 200 plus 4 to 5 years scattered payments.
Yes.
And this in Worli Niara, we have launched the project in 14 acres. So I think we have more land available there, no?
Yeah. That will come up later.
What is the total land area in Worli?
Developable land is 30 acres.
30 acres. Sir, last question. This as a strategy, we are spread in 5 cities, and in every city there is a... Hello? 4. Okay, 4. So 4 cities. So as a strategy, every market is a different market. Every market has a different taste about the real estate. So how do we manage this and how we are comfortable for this?
So that's why we are not in more than 4 cities, Anil. We are only there in 4 cities. We understand all these 4 cities very well. These 4 cities together constitute about 65% of the overall market, residential market, and the least volatile, and they command the highest amount of traction, demand, etc. And we are very well versed with the functioning of these markets. We understand the consumers of each of these markets. Therefore, we are there in 4 markets, and we are restricting ourselves to only 4 markets at this point of time. We're not going into 10 markets or 8 markets or all the other tier 2 cities. Why it is very important to be there in at least 4 markets is because otherwise there will be too much concentration of risk if you operate in a single market. There could be, when one market is going through a flux, a change in terms of regulations, in terms of demand, etc., your balance sheet can get totally lopsided. So therefore, I think it's a balanced act to be there in these four markets.
Okay. Thank you, sir. It's helpful.
Thank you.
Thank you. Our next question is from the line of Dhananjay Bagrodia from ASK. Please go ahead.
Congratulations, sir, on a good set of numbers and very well outlined on our strategy and how we're thinking about it. But just a question follow-up from the previous participant. How are we considering there's been some issues with other developers recently regarding their quality in some of the new projects which they've done? What are we doing to ensure the same, that our quality will always be of the highest standard and we don't have those kind of issues?
So I think very simple principles, focus, laser sharp on execution, constant review, constant, acquire the best quality of people, work with the best contractors, best consultants, partners, strong review process, focus, top management focus on review and, making sure that, we give the best quality. That's just the commitment. And the understanding that execution is very important, not taking execution for granted.
Sure. Because just regarding the contractor part, is there any particular list of contractors who we would only work with? Because one of our larger peers has now started facing issues with some other contractors. Anything along those lines?
So we choose horses for courses. For example, if you look at for a Kalyan project, we are working with Shapurji, who's a very top-rated contractor, and the product is coming up very well. For our flagship project, Niara, we're working with Leighton, the multinational contractor. We've done marquee projects across the globe. While for our projects in NCR, we are working with a strong local contractor. So as much as the contractors' quality is important, is how we, gel, we and our project management PMC manage the quality, our own focus on quality, commitment, review, etc. So contractors is important, but also the plan from our side who's running the project at the site, the project manager and, focus on processes is also very, very important. So I think your question is right. It's very important to focus on execution. If you take that for granted, then projects will slide and consumers are going to complain. So we are very aware of that thing, and it's easily one can, that can slip out of in the quest for growth, etc. Sometimes people oversee this part, but I think we're very well aware of that. This is very important for the long-term sustenance of the company.
Sure. Fantastic. That was it, and congratulations again on everything.
Thank you, Dhananjay.
Thank you. Our next question is from the line of Biplab Debarma from Antique Stock Broking. Please go ahead.
Thank you. Thank you for taking my questions again. Sir, just first is I think I missed. Sir, what is the total GDV in Delhi? Is 1,800 crore or 2,800 crore?
28.
28. Okay. My second question, first question is that, sir, as we have demonstrated astute land acquisition strategy at a very, I think, a relatively very low cost, excellent selling ability. We have sold more than 80% of the inventory. So the only thing that remains is the product, how the product is executed. So the three projects in Bangalore, if I'm not mistaken, Bangalore, Kalyan, and in the first phase of Gurgaon are expected to be delivered this year. So can you tell us by when these three projects will be delivered this year?
Just by the end of this financial year, all three will be delivered.
Like in the last quarter?
So we'll start from quarter 2. This quarter onwards, we'll start handing over from September onwards.
Which project? September?
March.
September, which project, sir?
September onwards, we'll start with Alokia. One part of Alokia. Alokia will go from September to December. December to March will be Kalyan. February, March will be Navya.
Okay. Yeah. And my last question is, sir, you have a very good launch pipeline in second half of this year and also next year based on the current project. Sir, do you think in this year, based on looking at the robust launch pipeline, we'll be able to cross 3,000 crore of sales booking this year?
We are targeting 3,000 crores of booking this year, and about 5,000 we hope to cross next year. So at this point of time, we hope to achieve these targets.
Excellent, sir. Excellent. Thank you, sir. All the best.
Thank you.
Thank you. Our next question is from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, hi. Could you share with us your aspiration regarding becoming top 2 or 3 real estate developers in India? By when do you plan to achieve this?
As much as the size is important, we also very particular that we want to be the most admired real estate company in India, the most reputed. So quality, delivery, long-term products is as much important as the size. So we have to do both hand in hand in a balanced way.
Okay.
We are looking at reaching about 10,000 crores of booking in about the next 3 to 4 years.
Okay.
And then we'll start out according to. But more important is to deliver it, focus on execution, be the most admired, most customer-centric real estate company.
Okay.
Yeah.
And the group has how much land which, something like this Hindalco deal can fructify for Century?
See, we are focused on our chosen geographies. This is 4 geographies. So there we have mostly lands of our own parent company, Century. And with that, right now what we see is only this Hindalco land. We don't have any other in the horizon. But as we expand into other markets at the right time, when the growth story continues, I think there will be lots of opportunities unlocking.
From the group land?
From the groups itself.
Okay. And by when do you expect that to happen, the other geographies?
Yeah, it's anybody's guess, Raj. We don't know. At this point of time, I think we'll be focused to establish ourselves in these 4 markets.
Okay.
Maybe a few years later.
Okay.
I would like to put a number on that.
Okay. And the Worli land you said is total 30 acres, right?
Yeah, 30 acres of developable land is there.
Okay.
So we will be developing it in phases.
And presently you are working on how much of the area? Right now, the projects which are on?
14 acres is under development.
Okay.
Okay.
And the issue with the Wadia group is regarding 10 acres, right?
Yeah, that's not included in this. That's a separate land.
Okay. Any comments on that issue which is going on?
That's in the court. That will take its own time.
Okay.
Yeah.
Okay. Thanks a lot.
Thank you.
Thank you. Our next question is from the line of Manish Maheshwari from Manu Group. Please go ahead.
Hello.
Hello, Manish.
Yeah, sir, all my questions have been answered. Thank you so much.
Very good. Yeah.
Thank you. Our next question is from the line of Mr. Agam from Flute Aura. Please go ahead.
Hi, congratulations for a good set of numbers. Most of my questions were answered. I only have one question in the textile division. We are now looking at restructuring by way of spinning off the division. So I just wanted to understand, is it specific to this segment, and how are we looking for textile division in general? Are we looking to make it asset light going future?
No, it is not asset light in future. The spinning and weaving, which department we have closed, because we can outsource the grey fabric, which is no more USP in the textile business. Of course, process house we want to run it properly, which we will run. So this is an asset-light model, and it will increase the EBITDA also and give the good return.
Okay, understood. Thanks a lot.
Thank you.
Thank you. Our next question is from the line of Karan Mehta, who's an investor. Please go ahead.
Hello, am I audible?
Yes, Karan, you are.
Yeah, thank you, sir, for the opportunity. I have one question on the paper business. We have taken a host of cost-saving measures in the last financial year. So can you please quantify the savings accrued from each of these measures on a full year basis?
No, we cannot go on, we cannot go on saying that because of what measure we have achieved what. But yeah, overall I can tell you on a overall basis, whatever measures we have taken, we have almost cost reductions to the tune of 80 to 90 crores.
Okay.
Yeah.
Okay. And sir, my second question is on the textile business. So when do we expect a turnaround in this business?
It depends on a lot of factors, so many, because at present the market is subdued, and we expect in the last quarter of the FY2024, 24, it will improve further when demand will come, both from the international and domestic market.
Okay. And sir, on, just continuing on the paper business question, so do we expect more cost savings in this? Any strategies or any plans to further enhance the cost savings?
Yeah, definitely. We are always looking for measures by which the cost could come down in the organization. That's our day-to-day job, and we are looking at so many aspects as to where we can further bring down the cost.
Okay, sir. And sir, like we have done in paper business, do we expect similar cost savings in the textile business as well?
Yeah. I think that's in textile business also. Yeah, it is without saying. It is a continuous process, and we always make all out efforts to save the cost wherever it is possible.
So, Karan, this is not for you, and not just for you, but everybody. This question on cost saving, yes. In fact, the restructuring that we have done in the textile mill is primarily because we want to save cost. So that's going to save a lot of fixed cost. Yes, we are not planning a lot of capex in the textile business, but we have always providing for capex in the paper business. And the capex that is provided in the paper business is threefold. One is to increase the capacity. So we are looking at increasing the capacity from current roughly around 5 lakh tons to about 6.25 metric tons over a period of 3 years. Plus we are looking at some efficiency improvements. Plus we are looking at some cost rationalization measures through this capex. So it is all part of the game, as Mr. Kaul said, that we are there for that purpose only. So certainly we are expecting, one is to increase the capacity and increase the margin, which are roughly should take us to around 20-23% EBITDA margins going forward.
Okay. And sir, it is seen that most of our textile peers have started becoming profitable and have started showing good growth. So when do we expect a better growth in this business?
Difficult to say, but as I said earlier, it should start in quarter 4 FY24, when the market sentiments will improve, hopefully.
Okay. Yeah, that's it from my side. Thanks a lot for all the clarification.
Thank you. That was the last question of our question and answer session. I would now hand the conference over to the management for closing comments.
Thank you all for participating in this earnings Concall. I hope we have been able to answer your questions satisfactorily. If you have any further question or would like to know more about the company, please reach out to our IR manager at Valorum Advisors. We are thankful to all our investors who stood by us and had the confidence in the company's growth plan. And with this, I wish everyone a great evening. Thank you.
Thank you. On behalf of MK Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.